Okay, this here is the recap for Apple for May 30th. The breakout did actually occur, triggered me into my first lot of shares here at 153.85, and as a result of bad discipline, I did not close on this break, and not even on this break. I was greedy, didn't want to acknowledge that that trade did not work, and just held. So it rolled back all the way down here, at which point I did double my position, and it was at a known support, and assumed that it was going to continue higher. I saw an inside green candle here, and just kind of went with the flow, and luckily it did actually work out. As it came up, price consolidated, I did trigger into my final lot of shares, and wrote it up as high as I could until I took off a portion of it up here, and the remainder on a trailing stop at this point here. Overall, about a $300 trade, not too shabby, but not as great as I had hoped. It looked like price was actually going to break this trend line here and actually continue higher, which it did not. Now this is a clear chart without all the notes on there that I was just showing. Go out here to the 30-minute and see kind of what has happened. This trend right here, which was resistance, price just kind of hugged around it, and now we're finally above it. Broke above it with some decent amount of strength, and had a fairly good amount of volume that did push it above on a 5-minute basis here. Followed through very moderately and came back down to basically the technical buy area, and has now broken back below it. So tells me this breakout was not as strong as it could have been, not near as strong as I would have liked to have seen it, and we're probably still going to continue consolidating here for a little bit longer. Now we have what looks like a new range of 154.40 to about 153.40, which is still okay, still acceptable. The 8-period exponential moving average here on the daily time frame is 153.5, so still within a reasonable tolerance of that level here with this support. Next support down here is going to be this double bottom touch of 152.5, which I'll also have support entry set up here. And finally, the third level I'll be watching is the 21-period exponential at 151.5. Okay, those are going to be my trades mapped out. I will be looking for a continuation back up to all-time highs and looking for a price target of around 156.5. You can go ahead and put that target on there and go on out here to a higher time frame and still reiterate what's going on over here. Okay, so this is the weekly chart. Each one of these candles is 1 week. Big move up, a huge red candle here with a lower wick implies failed strength in the sellers, and it actually formed basically into a hammer candle, which is one of my favorite patterns to trade. Last week we did put in an inside candle, which simply means all of this price action is contained in the previous week's range. It shows indecision, and there are going to be players that are trapped, participants that are trapped, excuse me. Their stops are going to be above here for bears and below here for bulls. With the way that the daily chart is set up, this trend is still extremely bullish, and if it was to break down, it probably would not break down very far with all of the supports that are below it, with the different moving averages. If you play Bollinger Bands, if you use the Ichimoku Clouds, pretty much anything is going to have some sort of support below price here. Now going forward here, it's still very bullish. No reason to take the other side of the trade and play for a short position yet. Just keep this on my watch. We'll take these continued support entries here and look for some more momentum up. Just may take some time. This will be my trade plan going forward. Good luck.